morning. You're watching The Market right here on 18 with me, Aisha Faridi, Aman Dabash in the studios. And Aman, boy, what rains outside.
Absolutely. It's lashing rains. It's pouring and...
yeah, and hardly any visibility.
Absolutely.
So, yeah, it seems like the respite
That's why perhaps Anisha is a bit late.
Maybe, yeah. So, that respite that Mumbai got for the last 3 odd days when the rest of the country was rained in, well, today it surely is making up for all of that and more. But it's been raining gains for the markets as well. We managed to clock a fresh high for ourselves yesterday, petered down from there, gave up most of our morning gains. But nonetheless, at 19,400 plus, I don't think you can really complain about what the markets have been up to. This morning, once again, you've got an extremely supportive global map as well. You've got the S&P 500 index as well as the Nasdaq now hitting 15-month highs. So we've seen a rally play out for a fourth consecutive day. Cooler than expected inflation clearly has been aiding the sentiment there. The chink in the armor, so to speak, is crude, which is now not just topped 80, but $81 per barrel as well. So that's going to, really bob its ugly head once again. And I guess impact inflationary concerns once again. In fact, OPEC has now raised its growth forecast for crude oil prices. And that is impacting crude, which is now at a 3-month high, Aman. But for our markets, yes, a little bit of a disappointment considering IT, rest of the market cooled off.
Yeah, and yesterday was the day that we hit those all-time highs, but then we petered off from those levels. Perhaps no complaints given that it was still around the 19,400 mark in yesterday's trading day. That's pretty much where we wrapped up. But it was the broader markets that saw a significant cool-off from the peak. In fact, by the time we shut shop, it was a complete U-turn, and you had the mid and the small cap indices that wrapped up lower by close to 1% in trade. In fact, the small cap index has fallen to this extent for the first time in the last 13 sessions. We have been seeing steady gains for the small cap index in the past couple of weeks or so. So putting the brakes on that gaining streak when it comes to the broader markets. In fact, as you were talking about as well, Aisha, when it comes to the large caps, you did have Reliance Industries that was... the stock put the brakes on its gaining streak as well. So it did come under a bit of pressure, wrapped up the day close to 1% lower at about 27.43. So that stock didn't quite perform. And yes, you did have IT in the limelight on the upside. So the likes of TCS, Infosys, Tech Mahindra, they really led the way. And then to a certain extent, of course, those banks and ITC did their bit. But yesterday, after one day of selling, the FIIs are back to buying.
Yeah, they're back to buying and back to buying significantly once again. So yes, it was IT, much as it took the street by surprise, irrespective of the commentary coming in from, most of the IT majors. The street already absorbed that in, and the street is willing to give them that benefit of doubt that maybe another quarter down the line, we will see a recovery coming in, and worst could be behind us in terms of what the Q1 and the Q4 FY23 performance was. So yes, that said, IT was really the saving grace yesterday, be it HCL Technologies, which also, by the way, was a bit of a howler of a number. But even then, the kind of resilience that HCL Technologies showed yesterday, TCS, Infosys, of course, were rank outperformers. TCS, for the better part of yesterday's session, was one of the top Nifty movers. That managed to clock in 2.5% of a gain. And what was the beauty about the IT comeback, so to speak, was that it was not just these benchmarks and the earnings contenders which actually held out. You had across-the-board strength. So even if you look at the mid-cap names like a Persistent, like a Coforge, Birlasoft, the entire pack was holding a buzz. Of course, it's unfortunate that it was only them and the rest of the market cooled off. But today, it would be intriguing to see whether this was just a one-day move or can IT really sustain this move today as well? Because remember, we're going to be reacting to Wipro's numbers too. So while the revenues have been in line, the margins have been in line, the PAT has little bit been on the lower side. So let's see whether Wipro also gets a thumbs up or not, considering, Wipro, as opposed to the other IT majors, has been a rank underperformer also. But yeah, you've got a big listing today.
Absolutely. We'll be watching out very closely for that. But before we do that, let's hear it out from the management of Wipro as well. Yes, there were large deal bookings. Growth was seen at about 9%. But as you said, the PAT was a little bit below street expectations. Let's hear out what the CEO had to say.
The reality is that the market, the way we saw it about 3 months ago, is actually been hasn't changed dramatically. It continues to be a market where there's demand. There are deals in the market. We are closing more deals than we typically would have closed some years ago. We are closing large deals. And at the same time, the volume of discretionary spend has reduced. And I think we see that across industries. There are some industries that are, certainly more exposed, and those industries, whether it's banking, financial services, technology, where obviously spend has been very high for, several years, and communications. In some other industries, we see more demand, less reduction of the spend, in industries such as healthcare or energy and utilities. So that's what we are seeing. So to your point, that the market is basically how we've seen it for the last 2 quarters.
All right, we'll have to watch out for that stock in today's trading session. But there are other big events as well that we'll be watching out for very closely. And you've got Senco Gold. Is it going to glitter on its debut? That's going to be the big question. Do remember, it's a Kolkata-based jewelry retailer. They have a very strong presence in eastern India, and the street is going in with expectations that this time around it could be a pretty strong debut, because you do have a very strong response as well that was seen to the IPO. There was more than 73 times subscription, and it's a 405 crore rupee IPO, and you did see the QIBs which did subscribe more than 181 times. So they do have a strong leadership position in the eastern market as well. They specialize in gold and diamonds, and we will of course be interacting with the management later on. But from a long-term perspective, given the fact that they do have that omni-channel exposure, the street is betting on the fact that it could perhaps be a glittering debut for Senco Gold. But the other big one, Aisha, that we'll be watching out for is India bidding to become only the 4th country to execute the landing on the moon with Chandrayaan 3.
Oh, yeah, absolutely. The spacecraft is locked and loaded. And in just a few hours from now, Chandrayaan 3 will be taking off from the Satish Dhawan Space Center in Sriharikota. The spacecraft is scheduled to take off at 2:35 this afternoon. All things go well. It's a moment that India has been waiting for the last 4 years now. It's India's 3rd mission to the moon, and it's literally aiming to achieve the impossible, right? What its predecessor couldn't do to demonstrate ISRO's ability to complete a soft landing on the lunar surface. Let's see if Chandrayaan 3 can actually pull that off or not.
Yep, that's going to take place at 2:30. And back, by the way, Chandrayaan means moon vehicle in Sanskrit. Okay, let's hear it out from the chief of ISRO, S. Somnath, who spoke to the Times Network on this historic launch.
Essentially, the same 3 constituent elements of the Chandrayaan 3, like the orbiter, which is now called the propulsion module, the lander, and the rover, are still there. The orbiter part is not having any significant payloads like last time. Its primary job being take the lander and the rover to a 100-kilometer orbit around the moon after the injection to the Earth orbit. This time the propulsion module is not improved. We removed the payload elements, and it is given task only to do the function of reaching it up to the moon. And the second part is the lander is now heavier by almost 200 kilogram plus. What we did is there are many more changes done in the lander, primarily to handle higher velocities of landing. It has new sensors which will take care of the sensor failures if at all it happens. It has new algorithms and software sitting there which are made wider to handle. Its control and guidance algorithms and softwares have been modified and capable of handling multiple paths of travel to reach the land. Landing spot is also almost the same, because it is almost 70 degrees to the south pole. And this location has been selected last time also, where there is sufficient illumination of the sun, but it is closer to the south pole, where we have more scientific interest, because the equatorial region, which is very safe for landing, which is enough solar power and the risks are lower, has already been surveyed, and a lot of scientific data is already available. So if at all we have to make a very significant scientific outcome out of this mission, it is better to go to the pole. And that's why we selected a place closer to the pole, but it has higher risks of landing safely.
Okay, let's move on, and lots lined up this Friday. Let's take it across then to our chartists and find out what is it that they're making of the market structure right now. We have with us Kunal Bothra as well as Vaishali Parekh joining in on the show. Kunal, Vaishali, hi, morning to both of you. Kunal, let me come to you first. What did you make of that late hour sell-off that the market saw? And, you know, the fact that we gave up all of our gains, only IT was withstanding the green.
Good morning, Aisha. Good morning, everyone. So, we look at the first set of data points, which is change of open interest. Whether there's been a dramatic change of open interest, that generally determines that whether it's a trend which is going to last or whether it's a trend which is going to emerge as a strong, trend which could reverse the course of the market action and the rally which we've seen for the index over the last 3 to 4 months. Now, in the last 3 or 4 days, we've seen just one trend which has emerged, that there's been a reduction in the open interest for Bank Nifty. Even yesterday, there was almost a 15% drop, 12 to 15% drop in the open interest for the Bank Nifty futures for the current month. But there was hardly any reduction for the open interest for the Nifty futures. So that generally puts in place that maybe it's a sector-specific selling which is happening on the indices. So 19,500 acting as a resistance, but 45,500 also acting as a resistance for the Bank Nifty. I think that's where the sector trends generally lie. Bank Nifty is a bit weak, and that's where you're seeing profit booking as well as long unwinding happening in the banking index. But then when we look at the sector composition, for example, yesterday what happened to these IT stocks, there was a classical unwinding of open interest for HCL Tech and built up of open interest on TCS, Infosys, etc. So that also puts in place that the market trends are now getting more tilted towards the IT stocks, at least from a short-term play. So we could now get into that balance where the Nifty could get into a consolidation zone further. The Bank Nifty may underperform, but the IT stocks and the IT index overall could probably try and pick up pace.
Vaishali, hi, morning. Yesterday was certainly commendable given the fact that we yet again scaled all-time highs on the frontline index. You did have IT at the forefront. What's your assessment of the kind of leadership that we witnessed in trade and the fact that the broader market saw a complete U-turn by the time we shut shop?
Very good morning to all of you. So, well, I'm very much in sync with what Kunal just said. Market is absolutely consolidating and view still remains positive, and we would be seeing sector rotation movement. So, IT is the focus and the goal spot right now. So, I would say that yes, most of the stocks, the frontline especially, are getting into the momentum. So, IT is the sector to look into. And now that you asked me about the frontline, Infosys, TCS, they are bucking up. I think it's a buy from here on. In fact, I have also chosen today the other IT stocks. One of them is InfoEdge. So I would be laying my bets on IT stocks.
Okay, fair enough. We'll find out those stock-specific ideas. Kunal, take us through your bets.
So I'll go with two buy calls. The first one is ICICI Bank. That stock relatively remained resilient throughout the day yesterday. In fact, yesterday it managed to close very near to its day's high, just about that 955, 960 odd range. So would expect this resilience to continue for ICICI Bank compared to rest of the other private sector banking names. Would suggest a buy with a near-term target of 1,000, stop loss at 940. And the second would be a buy on Better Foods. That stock has managed to come back into a stronger price action yesterday, coming back closer to the previous major high of 850 plus mark for itself. So would suggest a buy on Better Foods, near-term targets of 900 and stop loss at 810.
Right. Vaishali, what about your stock-specific ideas? What are you recommending this Friday morning?
So, well, I too have recommended ICICI, but well, one more stock. I mean, the other two stocks that I would recommend, one is Engineers India. It's continuing to be in a good upward trend and volume is also picking up. So I would say with a stop loss of 117, one should go for a target of 133. So this is one stock. And the other stock that I would like is Sun TV. Sun TV also is doing very well. So with a stop loss of around 470, I would be looking at a target of 510. So these two are my trading bets.
Okay, there you have it. Those are some top recommendations that our chartists are flagging off. But it's interesting then. We've got global commentary coming in, talking a lot about what's taking place in the US by way of events as well as the dollar index. So let's take it across then to Vinny, who joins in with a snapshot of all that key commentary. Vinny?
Good morning, and first let's talk about the commentary that is coming in on cryptocurrencies, because there was a landmark decision in terms of a victory coming in for the crypto industry, for Ripple specifically, as the federal judge actually passed a comment saying that Ripple Labs XRP, over there when you look at it, when it's sold to institutional investors, that time it's a security but not to general public, and that is why we have a comment coming in for Holger, who said that this is surely a win that has come in for the crypto industries, whether currencies or securities has been a major question and hanging over the industry, which has long fought efforts to regulate it by arguing whether they are or they are not, and that is why we saw the cryptocurrencies buzzing in trade as well, and that's the comment we have from Holger. Moving on, the next comment we have coming in from Mohammed Al-Arian, and what he's saying in terms of overall, while the implied market profitability did come down, the traders and investors do not expect in terms of the CPI data that came in over there, the inflation numbers that came in, the Federal Reserve, they do not expect the Federal Reserve from hiking in July, the rates hiking in July as well. And now what they're highlighting, in contrast to the current Fed's guidance, they are pricing in now even a lower probability of a September rate hike. So yes, July maybe, but after September there is a pause that we could see coming in terms of the rate hike. Let's talk about Disney CEO. He made some comments coming in there. He said there's a lot of work that is required in terms of the company. We will be seeing challenges that are greater than expected, is what he's saying, as well as some of the TV assets could actually separated and sold as well. That is something that they are looking at as well. Sports is a very strong segment for them and may look to partner over there as well. Lastly, we have a comment coming in from Peter Schiff, where he's talking about the US dollar index that broke below the 100 mark, as well as he said that the move to down to 90 could be very quick, and this should send the oil prices to $100 per barrel mark as well, but puts a significant upward pressure on the US import cost as well. So higher prices will reflect in the CPI, reversing the progress that Fed rate hikes made in terms of reducing the inflation. This is a concern they've highlighted in terms of the dollar index, as well as the I beg your pardon, oil prices is what he's spoken about.
Okay, Vinny, we'll leave it at that. Let's also hear it out from Gautam Shah of Goldilocks Securities as to what he's betting on, and he's not bullish on Reliance Industries. He believes that the stock has covered up for its underperformance, but let's hear out from him as to where he thinks it's headed next.
You've seen a lot of stock rotation and sector rotation in the recent past, and therefore the baton is being passed from time to various stocks and various sectors. So that's really what has happened to Reliance. It was an underperformer for a very long time. It's come back in the recent past. And this 28-50 area is a very important resistance. To be honest, I'm not still very gung-ho on Reliance. I don't think the stock can really do anything special from here. It could see a bit of a move, maybe another 5-7%. But the bigger opportunities is in some of the other sectors. So Reliance, I think it's just made a comeback. It's covered up for the recent underperformance. But unless it really gets past 28.50, I don't think something special is going to happen.
Okay, so that's the latest view coming in from Gautam Shah. But let's move on and talk about the stocks will be in focus today. First up, let's go across to Somit to try and understand what is on his radar. Somit.
First stock that we are talking about is Angel One. Now, the company has come out with its numbers. On the face of it, it looks pretty much stable, but actually the numbers are not giving some good signs, given the fact that the company's gross revenue has declined 2% on a quarter-on-quarter basis. Operating margins are declined by around 260 basis points on a sequential basis, and this decline in the margins was pretty much on the back of the increments given to employees. The provisions for variable pay have increased, and also because of the ESOP cost, this margins have come down in the first quarter of FY24. Now, when you look at the granular details, now the number of order was lower on a 5% on a sequential basis, but that was also because of lower number of trading days. But the number of orders that we have seen per day, now that has also been on that front also we have seen a marginal decline to around 4.14 million orders per day as compared to 4.24 million orders per day that we had seen in the fourth quarter of FY23. Now the client acquisition part, now that looks pretty much strong at around 1.32 million clients acquired during the quarter as compared to 1.2 million that was the average in the last 4 quarters. But there's one more issue on that front as well, and if you see the active client growth, now that has come down a bit, around 2% as compared to 4% number that we had seen in the previous quarter. Also the active client ratio has dipped to around 29% in the first quarter as compared to 38% that we had seen in the last year and 31% that we had seen in the fourth quarter of FY23. Along with that, if you see the quarterly average broking and depository revenue, that has also come off a bit by around 5% for active clients. So more or less, if you see, the numbers are not giving pretty much good signs when it comes to Angel One broking, because the granular details are also showing that there has been some weakness in the numbers and some slowdown that the company has been witnessing of late. But IT, yesterday we had seen a strong rebound from the lows, and now ISG deal wins are suggesting that they are pretty much stable and not much of a decline coming in.
Yeah, I think that explains the strength that we saw in the IT counters yesterday, because numbers were nothing to write home about. You wouldn't expect a large green tick coming on account of those numbers. But yesterday, even if you look at the post-market action in terms of the ADR, Wipro ADR, despite reporting a weak set of numbers, was up 1.25%. Infosys was higher by almost 4 to 5% overnight. And that tells you that there's a lot of momentum in the IT stocks. And one thing that can give the fillip is that latest data coming in from ISG that Sumit was just pointing out too. And it looks like they're maintaining the guidance for the full year when it comes to the traditional services or the managed services. They're expecting a growth of 5%. As the services growth, that is expected to come down to 11.5% versus 15%. But remember, for Indian companies, the managed services is more important, and that is expected to hold on quite well. Overall, if you look at the deal momentum as well, clients are more receptive to managed services deals and that feature cost optimization, efficiency gains, as well as vendor consolidation. And this is the part where the Indian IT service is very, very strong. US is a bit weak. They are saying it's driven by weak BFSI. Europe market is doing quite strong, especially UK, and that is what was relevant for TCS as well. They are actually expecting a good recovery in H2. That is my key takeaway here, because the street too is banking that there will be, the worst is over for IT companies. The second half is going to be better. They also say that the weakness in BFSI will recover in second half, and that's the biggest positive, because for most of the IT companies, the BFSI vertical contributes anywhere between 35 to 45%, at least for the large cap names. So the weakness of BFSI recovering in the second half is very positive. The fact that the managed services guidance has been maintained is quite strong, and the fact that the overall client conversations are moving at least in the right direction, that should be something that the street should perhaps take home, and that's the reason perhaps we'll see a bit of a positivity when it comes to the IT names today as well. But talking about positivity, there's a lot of momentum around Chola as well. The NBFC space has been seeing quite a bit of re-rating, and now there's a target price upgrade coming in, right?
Well, in fact, in case of Chola, if you see, it is by far, so far, the best NBFC on street, with around gains of around 60%. When it comes to the Nifty Financial Index, it is the top gainer. And now, of the 38 analysts that are tracking the company, only 10 of them have either a hold or a sell rating. In fact, only 2 of them have a sell rating when it comes to Chola. And today, Jefferies has upgraded the target price, or hiked the target price to around 1,350 from 1,100. Now, what the brokerage here is saying is that they are seeing a strong and less cyclical growth trajectory ahead when it comes to Chola Invest, and they're expecting their loan CAGR to be around 26% over FY23 to FY26. They are also saying that the new businesses will lift growth, and with higher growth, operating leverage will also start kicking in for the company. When it comes to net interest margin, they are saying that it's at a trough level. It's at its lowest point, and going forward, they're expecting an uptick when it comes to the net interest margin. They're also saying that the net interest margin could further rise if there is a rate cut going ahead. Now, they're saying that a 50 basis points rate cut increases the EPS for Chola Finance by around 8%. On the asset quality front, they are pretty much stable. Credit cost is expected to be low, and because of all these factors, they're also saying that the premium valuations that the stock is now commanding, around 5 times price to book, that will also sustain going forward. However, one interesting thing here to notice is that of the 38 brokerages that I was just mentioning, 28 of them have a buy rating, but only 8 of them have a target price of more than 1,300 rupees, which suggests an upside of around 10%. This means that the rest of them are yet to increase their target price, and most likely they'll wait up to this till the first quarter of FY24 results come in. So a lot is now dependent on the company's earnings, given the fact that if there is any disappointment coming in on that front, there won't be any big target price hike and more downgrades coming in. And if there's a good set of numbers, then obviously there could be more hike in target price. So we need to keep an eye out for Chola Invest numbers, because the stock has run up a lot, and brokerages are yet to upgrade or increase their target price.
Yeah, no, that's the call, because it's up 55-60% that you said this year itself. Now, when you look at the consensus targets, it's not that high. The upside is only 10 to 20%. But if those upgrades do come by, that will be the big kicker. But Chola was traditionally an auto company, right? Now you're saying that the diversification and the non-auto book is likely to lead the growth.
Yes,
is that
exactly.
What
that's what the brokerage is suggesting at least.
Okay, let's see what happens as far as Chola is concerned, but definitely quite interesting, and the stock on a lot of investors and analysts' radar. Let's do one thing, let's step into a very short break, but when we come back, we'll discuss more of these stocks with our guest on the show as well.
Welcome back. Still tuned in to the market. Lots of stocks that will be in the spotlight on the back of news. So let's connect with our team of research analysts to find out which ones they'll be. Now, remember, yesterday Federal Bank came under acute pressure. They reported their Q1 results as well later. It was a lackluster set, and asset quality deterioration was pretty evident, with profits as well below street estimates. Vamakshi joins in then to break down the numbers as well as what brokerages have to say. Vamakshi?
Well, yes, after Federal Bank reported its Q1 numbers, we have a slew of brokerages coming in on the counter. We have Bank of America as well as Citi maintaining a buy call on this counter, while JP Morgan has maintained its overweight call. Morgan Stanley has maintained its equal weight call, while Investec has given a hold call. Now let's look at the commentary that actually came in from all these brokerages. Let's first start off with the NIMs. JP Morgan believes that higher deposit rates are driving the pressure on NIMs, while Morgan Stanley believes that NIMs are near the trough, but the recovery is expected to be gradual. Investec is in fact estimating the NIMs to be in the range of 3.15% to 3.25%, and this is marginally lower than what the management had guided for. Now let's also look at their commentary on loan growth. Brokerages are largely believing that there was some strong credit growth seen across segment. Even the mix seems to be improving as well. Now let's look at the asset quality. JP Morgan believes that the asset quality was stable this time around, while Morgan Stanley believes that the asset quality remains quite comfortable, though retail showed higher slippages from the restructured loans. As far as valuations are concerned, they believe that the stock is not expensive at 0.9 times FY24 book. Valuations, in fact, they're highlighting are supportive as compared to the other mid-cap peers. So largely that was the take coming in from brokerages on Federal Bank.
Well, it's time now to get you the BSE MD and CEO Sundara Ramamurthy's first ever interview. He believes India has a long runway for growth and BSE will continue to ride on that. Listen in.
India has grown a lot, and in my opinion, India is going to grow even more. This is another pet topics for me. If you look at it, a growth of a country depends mainly on three factors, I must say: consumption-led growth, export-led growth, and investments-led growth. There is no need for me to further tell anything. In all these three areas, we are excelling. Yes, India's own population, with 65% plus in the age of 15 to 65, which we call as income earning age or employable age, and which will continue to be in that sweet spot for quite some time to come in the near future. And with a growing middle class, which is known for its consumption capability, and the doubling of the middle class consumption in very regular periodicity, and globally contributing for middle class consumption. The English speaking capability, which is a global language today, of this growing the income earning population, the time zone where we are kept, the legal and regulatory system that we have, which is one of the very good systems in the world, the democracy that we are able to provide, the cultural diversity which we are able to show, I think we are in a great sweet spot for further growth. It's going to be a golden era for Indians in the near future to come. Already it is, and it is going to
It'll
go
only
further
get
up.
better in the
Yeah,
coming
that's what I
decades.
feel.
So, the street believes that all these efforts put together, the future, the next 3 to 6 years for even BSE is very bright. And they're putting, say, somewhere around 25% kind of earnings CAGR possibility next 2 to 3 years. Do you think that's a fair estimate? Or do you think it can be improved upon?
I am a listed company. I am representing that company. I have very least capabilities to make any forward-looking statements. So I would like to say I cannot add any reply to this question.
At least you can say that the strategic focus, you just come a few months, the strategic focus of your team, you and your team, over the next 2 to 3 years, if you could share visibility on that. Market will of course do their own math and talk about earnings. I don't want an earning reply from you, but the areas of strategic focus from you.
That's a very good question that you have asked. Basically, when in a single sentence, if I have to say, it is we want to unleash the power of vibrance. That is the single sentence which I repeat every time to my team, and my team believes it. I have a wonderful team with me, fully supporting me, which is very evident. Otherwise, I could not have done whatever I have done in the last 6 months. 6 months is too small a period for bringing in changes. Already, if you perceive that I am making changes, that's not because of me, it's because of my team. So the team is oriented to unleash the power of vibrance, as I said. What do we mean by that? In every area of activity where we have present, we have to make our presence felt, and we have to make our vibrancy felt. Where all we are there, equity derivatives, currency derivatives, commodity derivatives, interest rate derivatives, SME, mutual fund, RFQ platforms, retail debt. I can go on naming. Time is short for us, right? All of us have only specific tenure. In that we have to pick and choose. For us, for this current year, what we have picked and chosen is equity derivatives first, followed by equity, and then is currency options, to be very
Okay, that's the BSEMD CEO, and you can catch that entire conversation at 9:30 a.m. today. Let's move on. Let's discuss the texture of the market. Sandeep Sabharwal as well joins in on the show right now. Sandeep, hi, good morning. Good to have you on the show as always. Sandeep, wondering whether the moves on IT would continue today, because Wipro too has been a disappointment, at least given by the PAT performance, not so much the revenue and the margins. They were in line. But do you think we can see a follow through?
In the IT sector, it's unlikely that we'll have significant gains from current levels, simply because of the fact that this entire versus over trade, which is being played in the market, is, in my view, a fallacious one, because the worst is clearly not over. The discretionary cut down has just started. This is the first quarter these companies have actually started accepting that. It should last at least 2 or 3 more quarters. So there's not going to be any positive earnings surprise coming through. Secondly, given the way the dollar index has fallen, and it looks like the US dollar index will decline further, there's a probability that the rupee might actually appreciate over the next few months. So a tailwind for their margins, which was helping them, which was rupee weakness, also might not be there. So I think the headwinds are greater than tailwinds. So I would not be too aggressive in IT stocks at this stage.
Yeah, not too aggressive, and I agree with the fact that there are more headwinds than tailwinds, but stock markets can be irrational at times, and that's what we saw yesterday. And even the ADR moves that we were pointing out to, Infosys being up 5%, Wipro being up 1.25%, and the ISG data coming in. For a day, maybe we'll see a bit of a bounce as far as this entire space is concerned. But Kunal, I wanted to get a sense from you with respect to some of these big buzzers which we saw yesterday as well, the likes of Zomato as well as PB Fintech. From this entire new age tech world, do you believe Nykaa is now ripe for a up move and a breakout, given the fact others have run up? And for car trade as well, there is a downgrade that came this morning from Kotak saying that it's run up already. Does chart also support the view of consolidation on car trade?
So I'll start off with Nykaa, because I think that stock I would still believe that is some distance away from actually giving a breakout. So the first and the more classical benchmarks which you look out for is the break of the 200-day moving average apparently for Nykaa from the previous year highs. And in fact, when the stock had actually gone to that major downtrend, it's been unable to surpass the 200 DMA. Most of the other new age sort of stocks, like Policy Bazaar, Paytm, etc., Zomato, these stocks have already confirmed a breakout much long back in this last 3-4 months of uptrend for themselves. And from there, these stocks have climbed up another, say 20-25% odd as a fair cushion for these stocks from the long-term averages. Nykaa is yet to confirm a breakout, so it's always better to wait out for that confirmation rather than anticipate the confirmation for the stock. The 200 DMA is at 153.54 for Nykaa. The stock is at 143 level, so it's better to wait out for the stock to confirm that breakout before we jump in and take the trade. Car trade could be interesting because the stock in just the last 1 week or I think 10 days has actually given that 200 DMA breakout. Now, what's actually happening is that the volumes are rising for car trade with every rise in the prices. So I think last week or just 3-4 days back, the stock had seen a major gap up opening. The volumes at that time was at a multi-month high for car trade. The stock has not yet filled the gap entirely. It's still trading above the 200 DMA, etc. So when you look at the factors for car trade as a chart cleanly, it's much better placed than what Nykaa is as of now. So I believe that that's a better trade as of now. 200 DMA for car trade is closer to 455 level. So the closer you are towards 455, so maybe 470, 475, the better the risk reward is to initiate a buy for car trade.
You also had Federal Bank that was in the spotlight yesterday, and it was a lackluster set of numbers, to put it mildly. Brokerages, though, have an equal weight or a whole rating on the stock. Sandeep, I'm wondering if you track a Federal Bank, what your take has been on the quarterly performance?
Yeah, so I think the Federal Bank results reflect what's likely to happen, especially in many of the smaller banks going forward this quarter and the following quarters, where margins will get squeezed as the cost of deposits move up, because given the way the structure works, their lending rates are linked to the benchmark. So the lending rates move up immediately, deposit rates follow. CASA deposit ratio has fallen drastically, which we'll see in many of the other smaller banks and also PSU banks. The street has been very gung-ho on PSU banks. I think we'll see a reflection of this coming in many of the PSU banks also. So after the big move in the bank Nifty, which we have seen over the last few months, it's better to stick with the leading larger banks because they will be a bit insulated from this, although their names will also come under pressure, but not as much as what we are seeing in smaller banks.
Okay, meantime, let's also get in a take on the charts then. And Naresh wanted your outlook on some of these stocks that were active within the Vaishali, on stocks that were active despite the fact that the broader markets clearly came under pressure. What's the view on some of these mid-cap IT names, the likes of Birlasoft, InfoEdge, Zensar Tech, etc.?
So I would say definitely, they are comparatively performing much better. So talking about Birlasoft, well, the trend is intact, and I think there is still scope for further upside move, going towards perhaps 380 and all. And even InfoEdge, in fact, that is one of our recommendations. It's got into new round of momentum. So I'm looking at a trading target of 4,800, and for positional buy, it could be even higher. And Zentech, of course, Zensar Tech, yesterday we saw good volume spurt coming in. So I think that is also set for a new round of momentum. But well, of course, with a calculated risk of 390, I would look at a target of 435.
Right. Okay, Senco Gold, that's where all the action has been. It's set to list on the bourses today, and my colleague Vinny joins in with this specific on the company's financials, what the IPO subscription data was like, and Vinny, how it compares with its peers as well.
So yes, we're expecting a stellar debut that could come in from Senco Gold. Now, let's not forget, given that the total subscription was 77 times, if the issue price is expected at 317, but it's expected to be a bumper listing. So yes, we could see a premium listing coming in for Senco Gold. Now, other than that, when you're expecting in terms of Senco Gold is mainly gold jewelry retailer which is based mainly in the eastern region of India, north and northeastern region of India. Other than that, when you look at it, the market cap, if it lists at 317 rupees, that could be at around 2,400 crores. If it lists at a premium of 20%, then we could see a market cap of 2,899 crores, and a PE, that would be a 12-month forward PE, would be at 15.9 times. 30% premium would be a market cap of 3,140 crores, and a 70% premium would be 4,100 crores in terms of the market cap, and then the PE would be at around 22 times. But when you look at it, Senco Gold still is quite cheap in compared to valuation wise, PE wise, compared to the other jewelry retailers, whether you see a Titan or a Kalyan as well. And also the company is managed in terms of the financial revenues. Also, we have seen almost doubling in terms of the revenues of the company in the last 3 years, from 2,660 crores to around 4,000, above that 4,000 crore mark in FY23. Profits of the company also seeing doubling actually of growth as well, 61 crores in FY21 to 159 crores as well. So yes, the main region they work in is West Bengal, where 70% of the revenue comes from West Bengal, and then it comes in 12% from the east and northeast of India. So interesting listing, keeping an eye out on this one.
Well, yes, keeping an eye out on this one. Let's see how it lists. We'll tell you the discovered price at 9:45 and the listing happening at 10 itself. But for now, let's get you the fundamental idea coming in from Dipan Mehta.
Lots of choices in real estate, and you could really pick and choose. All of them are having a great moment at this point of time. The entire sector has livened up phenomenally. And depending upon your risk appetite, you could look at, if you are highly risk averse, then Godrej Properties, DLF, Macrotech, offer some comfort considering the size, the balance sheet quality, and the diversity of their projects. But there's a lot of value in companies like Shobha as well as Prestige, and this particularly new, project of theirs could be quite a big contributor to the revenues, considering that real estate prices in Bombay, especially that the premium level, are at record highs, sky high levels, I would say. So from that point of view, it opens up an opportunity for Prestige and provides them a foothold in the, I would say, the richest real estate market in India, that being Mumbai. So very positive on all real estate companies, but these are the 3 or 4 which we track, which I feel more comfortable about. But I'm sure there are many others as well, which should report very good numbers going ahead.
All right, meantime, let's get in a view then from Sandeep Sabharwal. And Sandeep, just curious, given that there's been so much action in the primary markets of late, what you've perhaps made of some of the recent new age tech companies, the kind of performance we've seen in Zomato, the concerns that have been flagged off by brokerages as well when it comes to some of these names, delivery, etc. And how are you looking at the businesses?
Yeah, so what we've seen is that we've seen a rally in these stocks driven by positive management commentary and some incremental reduction in losses. And that started off with Paytm, then got taken up by Policy Bazaar, and now some others are also participating. And Zomato was always the standout player in all these companies because it operates in a duopoly, and to that extent, at some stage, these companies should start doing well, although it's not reflected in the numbers yet. And we've seen the stock also rally to a 52-week high. So I think after these up moves, it's tough to make a case to buy. So I think when they were lower, most of us didn't want to buy them. So my view was 50, 55, we should be looking at Zomato, but I never ended up buying it. Now it's run up 50, 60%. So I think we'll just wait it out and see. At these prices, I wouldn't be buying these stocks at all.
Sandeep, have you taken a look at Senco Gold at all? It's due to list today.
No, the IPO companies I won't look at immediately, so I think sometime.
Fair point. Well, it seems like it's going to be a big bang of a listing, like Vinny was just highlighting, just taking stock of some of the other names from yesterday. It's the OMCs once again which are under pressure. Remember, crude is now all the way back to $81 to a barrel after the recent OPEC move. and that's really weighing heavy, or rather escalating crude prices further. Autos as well were a bit of a sideline yesterday. There was Reliance, SBI as well, which did not really participate in the move. And like I said, the only show of resilience was from IT, Bajaj Finance, and a one-odd ICICI Bank and HDFC Life as well, which managed to hold out. Sandeep, these insurance names have clearly managed to sort of rise from the ashes, seen a meaningful recovery since the budget lows. But would you recommend buying into any of them now?
Yes, I think the move was quite surprising actually, the way they moved up, because the budget moves were clearly negative. Then a couple of months data on growth was above expectations. So I think that's led to this kind of rally. But again, these stocks now at these levels, ICICI Pru at 600 or HDFC Life more near 700, they don't really have value at these prices. And I think that's the challenge for investors in these markets, because when a trend starts, some of these stocks move up 30-40%. That's the time people start looking at them. But then, given the overall growth outlook at those prices, then the value is not there.
Patanjali Foods, let's just bring up that stock price up for you, because while they did, declare the OFS price that at a base level of 1,000 rupees per share. Yesterday, of course, the stock tanked. Now, last evening, they said that they're not going to be exercising the green shoe option of the OFS issue. So this is going to be another stock which you may want to keep on your radars today as well. Angel One, good performance coming in there. We saw Anand Rathi as well perform extremely well in terms of their quarterly numbers. For Angel One, the revenue has risen about 18.5% on a year-on-year basis. The gross client addition as well has seen an uptick of about 2.5% sequentially. And Sandeep, quite interesting. I don't know if there is a trend here or whatever, but some of these market-linked companies or market performance-linked companies have had an excellent quarter.
Yeah, so because it's very clearly linked, Aisha, we've seen it all the time. Whenever the markets start doing well, trading activity, retail activity picks up, and like the first quarter was subdued, this quarter was better. So I think those trends will continue. So the key is that do investors want to buy these companies whose fortune are only linked to how the markets do, or they want to actually buy into companies where you can actually analyze the companies more granularly in terms of what they are doing is driving their growth. So I think that's the challenge. Overall, this industry is still facing margin headwinds and growing competitive intensity. So, and the PE ratios at this point of time are very, very high.
Yeah, the PE ratios are very high. Kunal, I wanted your sense regarding the dollar index. It's what, after 10-15 months that we have seen the dollar index slipping below the mark of 100, and I'm guessing it will have an impact on the metal companies as well. Any take on where the dollar index is headed and the metal counters?
So in fact, I was looking at the charts for dollar index, Anisha, and the index has actually come back towards a major multi-month low. But that's the other point is that it's coming back to a major retracement support. Now the indicators for dollar index at 99.5 odd levels where it's trading right now is actually at an extremely oversold territory, which means what we can probably look out for over the next 1 or 2 weeks is some sort of a stability which should come back for dollar index at this zone of 99. So maybe a range of, I think, 2% for dollar index, 100 to 101 as the higher end of the resistance band for dollar index, and maybe closer to 98 or slightly below that would be a major support for dollar index. I don't expect a major sell-off coming into the dollar index further from current levels, at least, maybe a period of cool-off, which could probably get into a time-wise correction for dollar index because of the way most of the indicators are poised on the daily chart. So I would probably expect at least few days of consolidation, if not, a bounce in the dollar index, at least over the very near term.
Right. Okay. Just looking at what some of these other newsmakers are in today's trading session, and look out for RVNL as well. They once again got that letter of award for an NHAI project worth about almost 808 odd crore rupees. We've already seen how robust the defense deal pipeline has been. And Sandeep, many are circumspect about how long this rally in some of these railway and defense names is going to last. But given the kind of order inflows that one is seeing almost on a consecutive day basis, it doesn't seem like the story is anywhere near done.
I would agree with that. I don't think the story is done, but then it's also a fact that they have run up too much too fast. And they have run up in anticipation of growth, which will flow through over the next 2, 3, 5 years. So, to that extent, investors who are buying now and who did not buy earlier should be ready for corrective moves in these stocks, which could be sharp and which could be 10 to 30% also in some cases if the markets start correcting at some stage. So I think as long as investors know the risk associated with these stocks, longer term growth story is still there, and as such, because the visibility is so great, longer term they should still do well. In the near term, valuations seem to have run ahead of what the performance is right now.
Vaishali, have you looked at any of the infrastructure names? We get these slew of order booking details that keep on coming, the likes of NCC, NBCC, GR Infrastructure, etc. Have you looked at any name, anything that you like from that vertical?
So definitely, actually, I have been tracking NCC since quite some time. In fact, the new round of rally began right from 95, 98 levels. So NCC is on my radar and it has given a breakout even on the weekly chart. So I would say that it would be a buy at every decline. Now from here on, 120 would be the support, because when I'm looking at the weekly chart and all, and in all likelihood, the growth story looks intact, and I think it would be heading for a target of 160 to 180. So 120 would be the support, and buy at every decline. That would be my view, because a fresh buy at this level I would not recommend, because as I said, we've seen a rally right from 99 levels to now 135. So wait for a dip to get in for a longer move.
Sandeep, you also track NCC quite carefully. At 131, you think at least in the near term, the best could be behind us?
I think NCC continues to do well, given the fact that they've reduced debt so much and their order book is quite strong. I would still believe that there could be upside in NCC. People have been circumspect buying into some of the infrastructure companies because of the past experience. In the past, many of these companies flattered to deceive. And to that extent, I think broadly many fund managers, etc., have been reluctant to buy these stocks, whereas so the interest has been more on the newer plays like defense, new age, etc. I think on pure valuation and growth outlook, NCC still looks fine. I would still think that it should be able to give decent returns.
Okay, meantime, Sandeep, curious on your take on PVR Inox, and given the fact that it has been in the spotlight with respect to the GST, now they've slashed F&B prices by about 40%, and then there's, of course, new releases like Mission Impossible. What's the take?
I think the entire sector has took a hit because of the failure of few large budget Hindi movies, despite the merger of PVR Inox, which should lead to cost synergies and improvement in outlook. So at these levels, I would be positive inclined. In fact, we are buyers in this stock at these prices. We are slowly adding to this stock, because I think the negativity is at its peak, and we could actually see improvement in performance as the fact that while very strong performance, movies doing well continuously is also an aberration. Movies doing badly also continuously is an aberration. Finally, going out, people spending on entertainment, etc., in India is only going to grow. And the industry is very, very consolidated now. So at these levels, I would be positively inclined.
Okay, so that's the take coming in as far as PVR Inox is concerned. But let's take stock of some of the other, stocks which will be in news today. Of course, there have been order inflows for the likes of Ahluwalia, etc. So we'll watch out for that. Patanjali, wherein the green shoe option has been revoked for now. RVNL also did get an order, and then of course the earnings coming in for Tata Metallics, which was quite low. For Angel One, the optical numbers look all right, but Somit was telling us that the internals are a bit weak, so we'll watch out for that. JBM Auto has also bagged a big order for around 6,000 electric buses, and of course Wipro and IT, that will continue to play its part as well. Vishali, do you track this one, JBM Auto, and even if you can help us with a chart check on Angel One?
Yeah. So JBM Auto, well, it has been a super run all this while, and I would say right now it is in a consolidation. So in spite of the news that is getting fair orders and all, but I would say that one needs to be cautious because we've seen just one-way rally. So 1270 should be the near-term support, and below that the view gets negated. So keeping in mind 1270 as a crucial support, keep holding this stock.
And just to follow Vaishali, as far as the metals pack is concerned as well, of late there has been quite a bit of strength on the likes of Hindalco and the steel names. Do you expect that to continue? And of course, the additional fillip coming in for the dollar also.
I would definitely agree because, we have been recommending JSW Steel and Jindal Steel right from the time when JSW Steel was 700 levels. They both have performed very well, but now it's time for Hindalco to get into the momentum. And yesterday we saw the first attempt, it gave a breakout. And I would say that, yes, it's ready for a good buy even now. And of course, my idea would be for a positional trade. One can look for a target of 480 to 500 levels. So not in a hurry, but yes, one should buy this stock.
Okay, ONGC, look out for that. Crude, remember, is back at $81 to a barrel, and it's now at a 3-month high. So this is one stock which is going to be sensitive to it, as would be the case with OMCs as well. There's GMR Power as well. They've got a letter of intent for smart meter installation in various areas in Uttar Pradesh. So look out for that stock as well and what it does. And like Anisha was highlighting, JBM Auto after that 5,000 electric buses order that they have bagged. There's, of course, Tata Metallics. That could be the spoiler today, considering the revenues are down sizably by about 30%, and the EBITDA as well has seen a 62% sequential decline. So that's going to be one more stock which we're going to be looking out for very, very closely. But Sandeep, to the new face of the index now, with the HDFC gone, inclusion of LTI Mindtree, just wanted to understand what's your anticipation on HDFC Bank, given that the numbers are due on Monday, and whether a bank now in its combined avatar as large as HDFC Bank combined, can continue to grow at the growth rate that it has been traditionally?
Firstly, I think, Aisha, the growth will obviously slow down. I don't think they'll be able to grow so aggressively. And we could see the growth from 20%, which they used to do, move down to more near 15%. And they could still aim at higher than industry growth, although given their size, it will become tougher. The second part is that the integration creates several issues related to CRR, SLR requirements, priority sector lending, etc. And them having to raise deposits where it will be not possible to do that on the CASA front immediately. So it will have to be more term deposits or through bonds. So the next 9 to 12 months could be challenging for the combined entity in terms of profit growth. And that's something we need to see. The management is strong. How they are able to handle it, we need to see. In the near term, I would think be a challenge for the combined entity. And as such, after the run-up we've seen in the stock, we should see some consolidation. Big upsides are unlikely.
Okay, on that note, Sandeep, we'll let you go. Appreciate you joining us on the show today and talking to us about a whole host of sectors and stocks. The pre-open rate should just trickle in any moment now. It's 8:59. So we'll just wait by for those rates to come in. But the sense that we're getting, Kunal, is the fact that the markets will start on the back foot. If that does happen, would you buy the dip?
Well, I think if it closes to 90,200 on the spot, then yes. But I think if it's closer to 90,500, then the risk reward is not very attractive towards buying the dip on the index. I think the important index over here, which I believe is entering into the oversold territory, is actually Bank Nifty. So maybe another 200-point dip on the Bank Nifty, and that could probably be a very good risk reward to get into a buy zone for Bank Nifty. So Nifty, I would wait for a significant correction to go for a buy, but I think for Bank Nifty, maybe another 200 points lower, and then I think it could be a very good contra zone.
All right, let's get those mid-cap recommendations going as well, as we're checking in on the pre-open rates this morning around the 19,380 mark, and for the Sensex, pretty flat with a mild positive bias. Let's find out what's on our Chartist radar. Vaishali, your top mid-cap bet?
Well, I've recommended InfoEdge.
Okay, walk us through the targets.
So I'm looking for a target of 4,800, like I mentioned, and I would be keeping a stop loss of 4,500. And well, one more mid cap that is on my mind is Precall. Yesterday we saw after a good corrective move, the stock has shown a good bullish candle. So Precall is another stock in the mid cap category.
Okay, Precall as well as InfoEdge, that's a stock that Vaishali is reiterating. Kunal, your top mid cap recommendation?
Well, Avan, that will be a buy on Ipca Labs. Now, after quite some time, the stock is coming back into a swing breakout mode, breaking past about 755, 760 barrier. So would expect this momentum to continue for Ipca Lab targets of 800 within the near term, stop loss at 754.
Okay, let's tell you what else is happening outside the world of equity markets. And French President Emmanuel Macron has bestowed the highest military and civilian honor, the Grand Cross of the Legion of Honor, on Prime Minister Narendra Modi, hosted him for dinner. With this, PM Modi becomes the first Indian PM to receive this prestigious honor. And in a Rise with India moment, UPI will soon be available in France. PM Modi said that the first run will be conducted at the Eiffel Tower area, which means Indian tourists will now be able to pay in rupees. Also moving on, global entertainment giant Disney is looking to sell the company's linear TV assets amid concerns around the media industry's transition to streaming and digital offerings. The company will also go slow on Marvel as well as Lucasfilm movies. The movies come as Disney looks to cut costs.
Okay, and in some interesting news, the WHO has classified soda sweetener as a possible carcinogenic. The organization, however, said that this is based on limited evidence and more research is required. The US FDA disagrees with the classification. The soda sweetener is used in drinks such as Diet Coke as well as Pepsi Zero Sugar. Select content creators will be eligible to be part of Twitter's advertising revenues. They will get a share of revenue from the ads displayed in their replies, the tech giant said. Earlier this year, the company allowed users to offer paid subscription to their content on the platform. Monsoon woes continue all over India as areas in Himachal Pradesh, Delhi witnessed floods. Even the rising levels of Yamuna have surpassed the danger mark at over 208 meters. All schools and colleges in Delhi will remain shut till Sunday.